Hello and welcome to another episode of the SRP webinar series. For this session, we have partnered with IVM Markets to look at how the combination of SRP data and artificial intelligence can help the buy side to deliver added value to end investors by optimizing underlying exposure and improving outcomes while avoiding high volatility underlyings and retrading the same stocks. Today I have with me Volodymyr Gubsky, founder of IVM Markets, and Glicksman, president of IVM Markets, who will show how artificial intelligence and machine learning can be leveraged in the pre-auction stage and look at some use cases based on SRP data samples covering the French and Swiss markets. Before we look at the use cases, let me provide you with a bit of background on underlying usage globally in 2024. So from an asset class perspective, equity-linked products are back in focus, following a recovery of this asset class in certain markets compared to 2023, which was dominated by interest rates. In Europe, there was an increased demand for products linked to worst of baskets and single shares, with single index structures also driving some activity. In the Americas, equity-linked products were also back with a strong focus on indices via single index structures as well as baskets of indices. And in APAC, equity-linked products continued to recover, mostly driven by equity share baskets and single share structures, although FX rates continued to dominate sales. On the next slide, we can look deeper into the equity underlying by region. Here we can observe that baskets of shares remain the top asset class in the APAC market, with a stable market share over the last 4 years. Baskets are followed by products linked to single shares, as well as single indices and baskets of indices. In the next slide, we can see Europe, where baskets of shares took over 30% market share in 2024, compared to 27% in 2023, while single index structures also increased their market share. Here in Europe, single shares with a 17% market share remained stable in third position, followed at a distance by multi-index baskets with just over 2% market share. In the next slide, we can see the Americas breakdown. Here, single index structures dominated issuance and sales with over 27% market share, followed closely by index baskets with 23.5% market share. In the Americas, products linked to single shares saw their market share decreasing significantly by almost 40%, while products linked to baskets of shares increased slightly compared to 2023. In the next slide, we can have a look at the individual underlyings. In the single index category on the left-hand side, we see a pullback from the S&P 500 and the Euro Stoxx 50, but an increase in the exposure to small caps in the US via the Russell 2000 and the Kospi 200 in APAC. On the right-hand side, the basket comprising the Nasdaq 100, Russell 2000, and S&P 500 gained increased traction on the back of higher issuance in the US market in 2024. The basket comprising the Nasdaq and the S&P 500 came second in terms of issuance, thanks to activity in the US as well, while the basket comprising the Euro Stoxx, Kospi 200, and S&P 500, which dominates exposures in the South Korean market, decreased its market share on the back of regulatory pressures in that market over 2024. In the next slide, and the final slide, is we can look at the single stock segment. And here we can see that products linked to the NVIDIA stock saw the biggest increase following the rally of the tech stock in early 2024. On the other side of the spectrum, the Samsung share has halved its market share following headwinds with auto cores in South Korea that emerged in 2024. Also, Tesla and Amazon remain among the top 5 single stock underlyings, with stocks from semiconductor companies also showing a stable trend. On the right-hand side, looking at baskets of shares, semiconductor shares still remain at the top of investors' preferences, with NVIDIA and advanced micro devices leading the pack. Other baskets, like the Alphabet Amazon basket, was the second most featured combination, mostly in the US, while in Switzerland, the most featured basket, comprising Nestlé, Novartis, and Roche, saw its market share slightly decreasing compared to 2023. So with this little bit of background, we are going to move on to look at the use cases that IVM has prepared based on data samples from the SRP French and Swiss databases. And they're going to demonstrate how artificial intelligence and machine learning can help optimize exposures and improve outcomes for investors. Eric, the floor is yours. Please tell us a little bit about IVM Markets and what are you trying to achieve?
Sure. Good morning and afternoon to everyone. Thank you for having me. As a brief introduction for many of you, IVM is an AI-driven, cloud-based SaaS platform. It is designed to help advisors, salespeople, and asset managers rapidly translate client investment needs into actionable, optimal structured product choices. Our objective is simple. We provide tools to identify structured investment ideas with higher return potential and lower risk. From years of direct experience, I know that these ideas would be incredibly difficult to find without the power of AI, big data, and advanced models and analytics, or committing lots of manual time. IBM is not a broker or multi-issuer platform. Instead, we complement them and focus on the pre-trade design and analysis phase. Our platform enables users to evaluate thousands of pricing iterations across every basket combination, different buffers, barriers, call features, and tenors in under 60 seconds. This ensures that you'll find the best opportunities aligned with your clients' risk tolerances and objectives. Our value isn't just about designing products, it's creating flow for you by quickly turning investment ideas into feasible, actionable opportunities when the client is interested, not in a day, a week, or a month. Let's think about what's done manually today. Because the right tools aren't always available, many salespeople still rely on old school methods to get the highest coupons, participation rates, or protection. Screening for high volatility stocks or ETFs, picking popular trending names, or just copying and pasting from previous offerings. These approaches lack precision and may miss countless possibilities for optimizing risk and reward or delivering performance in the future. To truly maximize outcomes, structured product analysis should easily incorporate advanced tools that help evaluate all possibilities, such as looking at analyst ratings, 50-day implied volatilities, back testing, look at max drawdowns, look at forward simulations using Monte Carlo, and make it easy to compare coupons versus repayment at maturity across buffers and barriers, such as a scatter plot analysis. Today, we'll demonstrate how leveraging structured product data from SRP and IVM markets solves these challenges and transforms structured product design into a seamless, data-driven process. Let's get started. Vlad, the co-founder of IVM, will take it from here.
Thank you, Eric. So to introduce myself, hi, I'm Vlad, co-founder of IVM. Briefly about me. So I'm in the structured product market for nearly 20 years. I started initially in Merrill Lynch back in 2005, and just before starting IVM, I was head of structured products for my region in Deutsche Bank. So to follow on from what Eric was saying, we actually decided to run an experiment together with SRP, right? We believe that using AI and data-driven approaches to idea generation, brokers and advisors can achieve higher upside at lower risk. But maybe we are wrong, right? Maybe the market is already doing a good job selecting baskets, right? So we decided to test our theory, right? And so first, we're going to look at a case study from the Swiss market, looking at indices. Actually, all the data that we analyzed with SRP is from the Swiss market because it's the largest single country. It will be very interesting in the future to do this analysis for US, for France, for other regions, right? So first, we look at indices, right? We took all the auto call structured product deals from the Swiss market from June to August 2024. And we first identified the most traded indices. So here is a list, right? And here is the number of trades traded in the Swiss market in this period over here. We also identified the single most popular basket, Euro Stoxx S&P SMI traded 400 times. So was that the best basket possible? Maybe the market already did a good job, right? Let's find out. So the question is, these are the popular indices. Is the market packaging them into baskets in the way to get the lowest risk for the highest coupon, right? And then here are the popular barriers from that time. So they range from 60 to 70, right? Okay, so this is the typical analysis that comes out when we crunch the data, right? So we produce this scatter plot. What does it mean? Every dot on the scatter plot is one structured product basket and a particular level of protection and coupon. So you can see coupons go from bottom to top, and then there is this metric repayment at maturity, assuming max drawdown, right? So what does it mean? So here I have circled the most popular basket in the Swiss market traded last year, right? If you traded this basket with a 65 barrier and the max drawdown for the worst stock in the basket actually happened, you would get repaid 60 cents on the dollar. So you are losing 40%. Not great. However, if you traded it with a 60 barrier, you are okay in terms of the drawdown. Okay, but is that the best you could have done from that popular list of indices, right? Your clients are already happy with those indices. So are you packaging them in the right way? Apparently not. So these two dots, right, represent this one basket that the Swiss market traded 400 times. But surely you would prefer to have higher return for the same risk over here. And we can see them in the table. Two baskets that give you the same risk as this one, right? 60-65 barrier, 33 type of drawdown, you're okay. But the coupons are between 1 and 2% higher. 1 and 2% higher for a single digit return is a lot, right? Alternatively, if you were happy with higher risk, you could have gone from 7.4 coupon to 10% coupon. Again, 2.5% is very meaningful. Here, everybody asks, but what if the coupons that come out of IVM are total nonsense? Actually, this is like the biggest use of machine learning and AI. Our use of machine learning and AI allows us to capture risk appetite from issuers and to make sure that the coupons we produce actually match issuer prices, right? We have a lot of clients, we have the accuracy, right? Okay, now the next question is, if these baskets with better risk reward were available back last year, why have the distributors not been showing them to advisors, right? I leave you to think about this, right? So next, but do advisors care? Maybe they don't need data-driven analysis and they're just happy to retrade that one basket for 400 times and nothing else. Well, we asked this advisor, for example. So this is a family office. They have several $100 million under management, and this is what they say. I think it's total nonsense to just copy-paste the same product over and over. There we go. Advisors want alternatives, right? And then they go on to say that we got comfortable using data-driven optimization. It was very easy, right? So next, now let's talk about stocks. In stocks, there's actually a number of questions that we have analyzed. So firstly, we're looking at data from SRP. And the very first question is this: is it true still when somebody says, oh, my clients don't need optimization, they just trade that very small list of popular stocks that they are familiar with and they feel comfortable? This is not true. In Switzerland, during those 3 months, there was 1,200 stocks traded. There is no small popular list. Then 240 stocks were traded 50 times each, right, or more. 84 stocks were traded 200 times or more during June, July, August last year. There is no small popular list, right, that your advisors are just trading over and over. It's just not true anymore. Even if you organize all these popular stocks by thematic, you can see here in AI a lot of stocks, luxury, a lot of stocks, healthcare, a lot of stocks. Maybe in gold, right, there was this one super popular basket. Okay, so let's continue. And here we also picked out the baskets that the market was selecting last year, right? So all of these baskets traded more than 75 times in this period last year. So again, I ask the question, is the market doing a good job in terms of risk reward when it's packaging popular stocks into baskets, right? Maybe it is. Who knows, right? Let's check. Maybe doing selection using gut feel, volatility screening, and copy pasting is okay. Let's check. So before we actually get to risk reward in stocks, it's very critical to talk about maturity, because often we hear this rule of thumb, longer dated means higher coupon. Well, no, actually not correct. You will only find out if you run a proper optimization. So here we did this analysis on top 30 popular stocks in the Swiss market based on data, right? And also it's very important when selecting maturity, not just to select one basket and to check different maturities for that one basket, because you don't know if you're missing out or not, right? For this basket over here, 3 years is terrible, 1 year is great. But literally for the next basket that also has Tesla, right, is the 2 year, which gives the best coupon. And again, 1 year, 2 year, 1 year, 2 year, it's very random. I mean, there is a reason for it, but you're not going to know just by back of the envelope or rule of thumb, right? So next, once you selected your maturity, let's talk about risk reward. So for stocks, we did 2 types of analysis. Firstly, right, I'm talking about using AI to curate a stock list for a particular thematic, like here construction, right? And second step, optimize that list to select the basket to get the best risk reward. So the market in Switzerland traded Geberit, Holcim, and Sika many times. Was that the right move? Let's find out. We ask AI to curate a list of stocks over here which are relevant and also tradable as a structured product. And we then also double checked with SRP that investors in Switzerland are actually familiar with these stocks. Because here KGF, nobody traded, so no, right? But everything else, Swiss investors are familiar with, right? So then we look again at the scatter plot. So here we have the Geberit, Sika, Holcim. It's not bad in terms of risk, right? 70 barrier, 24 historic drawdowns for the worst stock. You're okay. If this drawdown happens, you will get your money back. But you have a low coupon, 13.5, right? And you have a negative analyst consensus. Remember, all this pricing, we did it backdated to June, July, August last year. So already then, this basket had the negative analyst consensus for the worst stock. So basically, this is the dot. Surely you would prefer to go up, right? Within the same risk category, drawdowns versus barriers, would you prefer a 19% coupon, 21% coupon rather than 13.5? So here you might say, well, but this basket has KGF. Nobody in Switzerland knows it. Fine. So basket 1, 21% coupon. Basket 2 and 3, around 18% coupon. This is like 30% more coupon or nearly doubling the coupon, right? Very meaningful while maintaining the same risk. Next, gold mining. So actually, this is interesting because the market in Switzerland traded only this one basket and only these 3 stocks for gold and no other stocks for gold. Why, right? So we ask AI again to curate some alternative gold-related stocks, right? There we go. We double check that all of them have been traded in Switzerland. They have, right? This is the basket that the Swiss market selected in aggregate, right? Terrible risk, right? whatever barrier you had, if you have it at 50% drawdown, you would be down 50%. But high coupon, so clearly people were screening for volatility, right? Ignoring the risk. So two options. You could go for this basket, FCX, KGC, WPM, get rid of the risk, right? Same barrier, much better drawdowns. And the coupon barely changes, 20.5, 19.5. Definitely, I would prefer to show this to my advisors, right? Or if you are happy to keep the risk, you could have boosted the coupon from 20 to 26. 6% coupon increase is massive, right? So again, I ask this question, why is the market not doing this, right? So perhaps they need the tools. Then a third case study is a more simple one. These are the baskets selected by the market in healthcare and life sciences. We said, okay, let's forget about using AI to curate the stock list. Let's purely focus on the stock list within healthcare, which was already traded by the Swiss market in that period. So now we are only analyzing purely, these are the popular stocks in Switzerland. Is the market packaging them into baskets the correct way? So only analyzing the effect of proper risk-reward optimization. And so we can see here, these are the three baskets selected by the market, circled in red. Bad risk, right? Huge drawdowns. Even for low barriers, it doesn't make sense, right? 60% hit the max drawdown, 60 barrier, you will receive 40 cents on the dollar if it happens again, right? And the coupons are, of course, here Nestle, Roche, Novartis with the lowest coupon, right? So 8, 13, 15. Now, here, if you went to this basket, LLY, NVO, and Siemens, you have a much better drawdown profile versus a 60 barrier. So you get rid of the risk, potentially, and you actually increase the coupon. You cut the risk and you increase the coupon, right? Here to 16.5% instead of 13 or 8 or 15. Alternatively, if you are happy to be risky, great, same risk, right? 60% drawdown, 60 barrier, but you should have been pushing for an 18% coupon. So if you look at the scatter, these are the three dots chosen by the market. This is what you could have had if you were data-driven, or even better here, right? Higher coupon, lower risk. Now, we've done this analysis for AI and semiconductors. We've done this analysis for luxury. Always the same story. Data-driven destroys gut feeling, volatility screening, and retrading the same thing over and over, right? But that's okay, right? Data-driven and AI appeared very recently, right? It's normal when new technology appears that the current selection process underperforms, right? The important thing, and this is my call to action to everybody, if you like what we are talking about, come to us. It's not about pitching you IVM. We literally would be happy to do this analysis for you. Send us the trades that you are working on. We will crunch the analytics. We will show you this type of scatter plots, and you can make a decision for yourself. Does data-driven and AI-powered idea generation work for you? Is it useful or not? So come to us, send us your trades. We will crunch the analytics. Also, we are happy to ask our existing clients. We have 16 brokers as clients. Many of them have given access to our software to the advisors to be self-service. Again, come to us. We are happy to try to connect you to some of our clients so they can share their experience of becoming data-driven and implementing all of this AI stuff into their workflow. So, next question. Is anybody actually doing this, right? And do advisors want it, right? Yes, they do. So Macro Wealth Advisors is a advisor based in Texas. They had access to a multi-issuer platform. They worked with iCapital, they worked with Luma, right? However, they still had an issue. They wanted to maintain 10 structured notes 10 thematic plays. They were doing screening. A lot of the stocks turned out to be too illiquid to price. The other stocks were producing bad coupons in relation to the risk reward. They started doing both AI-powered stock curation for the thematics and optimizing those stocks for risk reward. And it turned out that this even helps their regulatory audits. We have selected particular baskets, not just to get the highest coupon and highest volatility, but we actually analyze the risk reward, right? And again, they confirm, and this is an advisor, this is not a broker, it's a client of an advisor. They confirm that the learning curve was very easy. So, question is, how does an advisor monetize it? You get better risk reward and your clients are happy. How does the broker monetize it? Give a data-driven tool to your advisors and they will give you volumes. Go to new advisors and give them the data-driven tool and you will win their volumes. This is how you monetize it. And here I hand over for questions.
Thank you, Vlad and Eric. That's a very interesting analysis and very relevant and timely as the market continues to move towards customization. Distributors need to also move away from that, one size fits all approach. So I think, it's very interesting to see that, the power of data analytics and artificial intelligence to really dig into, the value of these underlyings. We can see, from the data that there is a lot of copy paste. There is a lot of same structures being repeated over time, even when they mature. And I think it's very relevant what you're saying of, is there scope to improve these exposures to actually improve the outcomes for retail investors? So thank you very much for the insights. And you mentioned in your slides, feedback from clients, which is, I think is also very valuable because it's actually, it proves that this is happening now out there. So based on that relationship with your clients, what kind of trends and what kind of baskets are your clients kind of doing? Do you have any insight and can you share any of that with us?
Yeah. So in terms of basket selection, what we see a lot is AI being used, right, to create stock lists. And what we see is actually nobody is interested to invest in like consumer discretionary or energy or technology, right? People want much more precise thematics, right? Like pet care, 5G, luxury, right? And so what this means is that you really must use AI because every time somebody does a search, they phrase the search slightly different. So trying to solve it using some databases like industry database, sector database, using some tags, it's too limiting. Because tomorrow people will start searching for something else that's hot and it's just not going to be covered by your database, right? So it turned out that AI is the only way to match the exact ask of the advisor to curate the stocks that are relevant. But then we discovered another interesting byproduct. People initially freak out by from some of the results that they see. Like literally today, BMW came up in a pet care search. So it's like, what the hell? Why is BMW here? Well, go to Google and type BMW pet care. And actually they have a pet care product line for pets or sitting inside the car.
Yes.
Would you have known this if you were using some database that just filters for sector? No chance, right? So anyway, couple of interesting observations here.
Yeah, just adding to that, AI is phenomenal in that it identifies within a theme names that you might not even think of, but it also does something where you don't just rely on it alone. I do believe there's a combination of still being someone who's curious, digs into the names when you're curating the basket and ultimately combining where you're using your own intelligence to then do the further review, see exactly, what AI said, then look at your ratings, your drawdowns, your volatilities, etc. So it's really the combination of the two that we find is the power with this.
Definitely. And I mean, I can think of several applications kind of top of my head. I mean, ESG, for example, has been, clearly a problematic to find, real ESG assets out there. And same example of Vlad was putting, we had something similar with, I think it was Volkswagen, and we're not picking up here names for any reason. It's just, that they had also, they were excluded from ESG baskets because they had a business line that was related to, weapons production. So, you need this kind of granularity to clean and to really get into what is an actual asset, what is an ESG asset, what's, a sector driven, all of that. So, but I mean, we're running out of time, and I've got two questions from the audience here. Maybe you whoever wants to pick it up. And maybe Eric, because you have, I mean, we've known you for many years. You have, that you've been on the buy side for many years, so you have that kind of knowledge and background on the buy side, which I guess Vlad appreciates you joining, with that knowledge. But from an artificial intelligence perspective and structured products, is the market ready to kind of make that leap and make artificial intelligence really a real tool? Or do you think there would be a period of, being that kind of patchy, marginal, until eventually people embraces these new capabilities and tools?
Yeah, there's always skeptics. There's a lot of skeptics. In fact, I probably was one as well before I started digging into this. But one thing that I'm finding is that there's a huge demand for personalization and tailored. The issuers have, really increased their ability and manufacturing capabilities to compress the time as well as the notional size, and clients are demanding it. So they're demanding these type of solutions, and they need very quick results. And without this technology and the ability to actually respond quickly, I just don't think that the market can do it without it. There's also huge scalability challenges. We've been talking to quite a few wholesalers. They've hit records last year, but they're not necessarily going to be adding more resources per se. They don't want to lose any resources. They're not necessarily going to add more resources. So they need to scale, right? They need to think of ways to make themselves more productive. And then there's also just big competition pressures. Everybody's trying to differentiate themselves. And if you don't have the ability to deliver performance and really try to do something that's not copy paste, it's not just screening high vol names and just using traditional methods, I really think that, you're not going to be able to see that growth, and you also have to deliver performance. Now, there will be regulatory considerations because everybody, is a little bit afraid of AI. Compliance has to do extra work to diligence it, but that's where, we're at the forefront of it, and we have a lot of data and experience, and we can see, the best way, even when you have something that's very complex, is you see the outputs, right? We're not always going to show what actually happens behind the scenes because it's proprietary, but you see the outputs, and the outputs match where there is, say with pricing, where the issuers are, where the multi-issuer platforms are finding the prices. So,
and to add like a couple of points from my side, right? So, coming back to this example of macro wealth advisors, right? I mentioned that, they already had access to multi-issuer platforms, right? Like all the big guys like iCapital, Luma in the United States. And I believe that's great. It's great that you have this rise of multi-issuer platforms. So it means even the smaller advisors, macro wealth, they have 3 people, 5 people, right? Basically, they can have access to super high quality service, from iCapital, from Luma, from big distributors, and electronic execution. So as soon as you start having electronic execution, it frees up a lot of time. So the question is, what do you do with that time? Well, IVM is a massive believer in synergy between idea generation and IVM, where you go from 1,000 iterations to 2, to then synergizing it with electronic execution provided by multi-issuer platforms. So you take those two best ideas, you then run them through a multi-issuer and get the best possible price and also the best possible service, from the big distributors, right? So we believe this trend will continue, more and more digitalization in terms of execution and service. So then basically the game becomes of, if execution is electronic, it means you are able to then use your resources to provide intellectual value to the advisor, right? Using AI, using data-driven. But it's very important. We are not talking about substituting humans. We are talking about augmenting them, right? You free up the time, you automate what needs to be automated, but then the whole point of being data-driven is to crunch the numbers. You have a very sophisticated calculator presented in a way such that smart humans can make smart decisions for their advisors, basically.
And you can see there it takes a lot of education, right? Just really what we're talking about. There's a lot of education. There's a pretty big gap. And I think that just by being out there talking about, what can be, is really important.
It's very interesting. And actually, the next question is about enablers, triggers, and challenges to increase adoption. I think on the triggers, enablers side, you've mentioned, operational, commercial. So there's a real case for that to be considered. From a challenging perspective, I mean, you mentioned education, regulation. Are there any other challenges that you think could prevent the market from adopting these kind of tools more actively?
Yeah, I mean, there's somewhat cultural resistance. We always find that our biggest competitor is just the manual way that people do things. So it's really a resistance to adopting it, AI. Some people fear, and Vlad mentioned, job replacement or discomfort with technology. So that's their, data quality and integration. Sometimes people are saying, the data is not there, the pricing doesn't match. So we have to get past those challenges. Somewhat costs of implementation at times, right? One thing I love about IVM is that it's independent. It's a cloud-based SaaS platform. So you just log in and you're there. But then technology's got to the point where we can do really fast integration with APIs. Somewhat of regulatory concerns. I mentioned that before. Hesitancy, compliance risks, and then again, just training and expertise.
By the way, guys, I see here like a whole bunch of questions popping up from the audience. Shall we go through it quickly as well?
Yes, let's go ahead. Let me just double check. So shall I read it out loud and you guys pick it up? So do you have an idea of the most optimized baskets in terms of drawdown coupon for the stocks, for the Euro stocks, say 50 only components?
Yes. Actually, this is, for example, one of the optimizations that happens often. So people type SX5E into our AI, they get the stocks from the SX5E, and then they basically, optimize, right? So, and by the way, so we do have the data. We can have a look at it after the call. But this ties back to the second question. So can you read out the second question from someone else?
So are you using AI more for underlying picking curation and calculating optimized structure? Is it more data crunching, or are you also using AI for finding the best structure?
Yes. So this is very important. We actually have two things, right? We have our main optimizer, and in the presentations, you saw the output of our main optimizer. The main optimizer is a guided journey for a human, right? So you type something into AI, or you have some kind of list of stocks or indices that you want. You run the optimizer, that's like a heavy duty calculator, and there are some risk metrics to pick the risk reward, like max drawdown, back test, and also Monte Carlo forward looking. So this is number one. So in that case, AI is used for stock curation and also machine learning to capture the risk appetite of the issuers. However, separately from this, especially built for advisors, what we do is we have this AI-powered dashboard. So basically, the AI-powered dashboard, it learns from all the activity of all the users who are using the main optimizer. And then when you type something like luxury, you don't need anything else. You just type where you are bullish, and the AI will optimize around the user activity and then select the ideas automatically for you and put them on screen. So in the dashboard, very much so, AI is used to select, right, as well. So yeah. And then here the next question.
The next question is, do you have, and this is a quite interesting one, which is like, using modules or software types. So do you have an AI agent that can be embedded to a multi-issuer platform? In other words, can you?
Yes, we do. So this is in fact this AI-powered dashboard, right? And the dashboard, like I mentioned, it learns from the activity of all the users who are using the main optimizer, right? And then the only input the AI dashboard needs is like, I am bullish here, I am bullish there. What we are also implementing is a research reading AI agent. So even taking a step back. So right now you can type, I'm bullish luxury, show me, AI will show you something. Or if you combine it with a multi-issuer platform and a life cycle, what is probably the best use case, you have a maturity or an auto call in the life cycle. Your life cycle pushes that node to our AI agent. The AI agent recognizes like what is the most similar in terms of thematic and structure, and then uses the dashboard capabilities to bring up some optimal reinvestment ideas. And then those optimal ideas can be firmed up in your multi-issuer platform. This is our favorite use case, actually. Happy to discuss it further.
Yeah. Brilliant. And the last question is for Eric. Is on the point of education or the education gap. And the person is asking if there is any SRP or IVM markets research pieces that we can sign up for. I can tell you that from an SRP standpoint, we don't have any research on AI, but we are trying to develop these webinars to kind of get insight and share, the knowledge from people involved in this part of the market with the wider market. So since I think there is scope to maybe explore with you guys, US market analysis, South Korea. So let's leave that as an option going forward. But Eric, what's your take on IVM markets research to kind of close the education gap?
Yeah, education is critical. And a lot of our education today just is really hand to hand. So the way that we operate with our clients is there's an extensive onboarding and a lot of training. And so our staff, talks to anybody who wants to become a client or prospect of ours. And we really cover soup to nuts, every aspect of the tool, but also in all these use cases. So a lot of what we do is look at use cases and provide the education around that. So that's something that we're growing. It's definitely something that will produce pieces, definitely for our clients, and participate in webinars like this and seminars and conferences, etc. So the education and the aspect of that is just starting now and will really grow.
Brilliant. Well, I think with that we can wrap up the webinar. We just gone over around 5 minutes with the expected the initial allocation. But thank you, Eric. Thank you, Vlad, for your time, for the input. I think it was a very interesting session, and I hope that everybody has enjoyed and can take some stock and takeaways from this. So thank you everyone for your attention. We do hope that the insights that we have shared will help you to understand a little bit more how the combination of data and artificial intelligence can help the buy side to optimize exposures for investors and deliver better outcomes. And thank you once again for your time, and we hope you enjoy the rest of your days. Goodbye, and see you soon. Thank you.